talking sin stocks, Ladies, gentlemen, in recessionary periods, typically tobacco giants and, of course, drug companies do very well. And MO, Altria Group, is no exception to this rule, being one of the largest holdings in my six-figure dividend stock portfolio, as I own 154 shares, paying me over a $500 dividend annually, which they just increased, now paying out over an 8% yield, which was actually ahead of schedule since the release of their Q2 earnings this morning, which we're going to get into in this video here, folks. But there are not many companies out there that provide products that have a history that has been around in society as long as silver and gold. One of the primary reasons I absolutely love holding these stocks, along with the reliability of their dividends. In light of all of this, I am incredibly excited to see how these tobacco giants are performing since this recession hit. So ladies, gentlemen, let's jump. Welcome back, passive income investors. And to kick this off, I want to talk about the hardest hit segments, which everybody is aware of, is the decline over time in cigarette sales. As we can see from Q1 of 2019 to Q4 of 2019, they have seen roughly about a 7% decline leading into 2020. Since the pandemic struck, more people have been smoking and they've been seeing an increase over time. As Q2 states, they've only seen a 2% decline in smoking sales, which is pretty incredible, and it's going to be neat to see how this moves forward. But let's get into some of the growing segments in the tobacco industry. Kicking it off with chewable tobacco. And chewable tobacco isn't what it used to be, is they generally make bags now that I guess sit under your gums. Nothing I've ever tried, but nonetheless, guys, just take a look at this segment. As in the first half of 2019, this was a $789 million business. In the first half of 2020, it is now an $872 million business, and they are expanding this now into over 20,000 stores over the next quarter. So it is going to be insanely fascinating to see the explosive growth coming out of the oral tobacco industry here. Now, another segment that is growing insanely well, one of my favorite segments that I am not unfamiliar to, we're talking about cigars. The cigar segment in the first half of 2019 was only $810 million, increasing to $854 million in the first quarter here. And as I mentioned, guys, general tobacco sales are going to be up. I mean, this is just so expected in recessionary periods here. And also talking about the e-vapor, I mean, people keep forgetting how diversified these drug giants are. I mean, we're talking about alcohol, tobacco, MJ products. We're talking about the vapor category, which is going to become a very interesting segment to Altria Group, as we are now seeing an increase in Q2 of 2020 in the vapor market, which you might be aware has been on a steady decline ever since the FDA stepped in, got really mad about the Juul and vapor products becoming too accessible to kids. So we are now finally seeing a turnaround in this segment here, folks, along with the release of their IQOS. Now, this is going to be a massive released product for them as they try and shift away from the negativity surrounding Juul. Now, I'm not too sure exactly the quality behind this product, but considering it's something MO is making, I'm confident that they're going to do fairly well. Now, some of the hardest hit segments came as a bit of a surprise, considering if you compare this to any other alcohol company, they're probably the hardest hit with their wine and beer beverages, as I'm pretty sure their beer company is down 40% in revenue. And considering wines are an extremely competitive market, we've also seen a fairly large decline there. And of course, we could say the same about their Kronos investment, which we're going to hear from the CEO when we get into the conference call here on this guy, is they're really banking on FDA approval for the MJ products in the US, giving them one of the largest manufacturing supply chains set up to really tackle the MJ markets here, folks. But let's just do a quick review of the earnings they released in the overview, and then we're going to listen in depth from the CEO himself. But we can see the adjusted earnings per share are actually up in the first half of 2020 by a whopping 17 cents. Smokable and oral products, guys, up massively, 10.9% increase in them. And then we can see the smokable and oral product margins have increased just slightly by 2.4 points, as obviously they're working on scale, getting these products out to stores. So their margins have dropped a little bit, but the fact that they have some pretty major growing segments here is very exciting, because everybody thinks Altria Group is kind of tied to their Marlboro cigarette brand, but they have a lot more going on for them than most people are aware aware of. And just taking a look, we can see that the earnings estimate came out with a quarterly earnings of $1.09 per share, beating the Zacks consensus estimate of $1.06 per share. And you got to keep in mind, these guys do not want a heavy amount of cash on the books. They really focus on getting most of their earnings out in dividends, along with basically doing write-downs. As we can see, going into Yahoo Finance, guys, and just taking a look at the 2019 earnings, which were abysmal, as apparently they lost $1.29 billion, really turned people away from this stock. But you have to remember, they didn't actually lose money. They just wrote down their Juul investment, which doesn't actually extend to the capital they're getting from their other products. It is just purely like owning real estate or a car and devaluing it over time. I still love these companies with a passion, and we're going to get to hear from the CEO to see what he thinks about all of these different segments. If you enjoy the clarity of my transparency on my investments, all I ask in return is you hit that like button, folks. But let's go ahead and see what the CEO has to say.
We're pleased to announce that yesterday, our board declared the quarterly dividend ahead of our normally scheduled declaration date. The board declared a quarterly dividend of 86 cents per share, representing a new annualized dividend rate of $3.44 per share. This represents an increase of 2.4% from the previous annualized rate of $3.36 per share, and marks the 55th dividend increase in the past 51 years.
Let's now turn to our results. We believe a mix of macroeconomic factors in the second quarter influenced adult tobacco consumer behavior. While the pandemic led to historic unemployment rates, federal government efforts through stimulus checks and increased unemployment benefits helped to ease economic hardship for low and middle income Americans. These efforts have likewise benefited our adult tobacco consumers. As a result of local restrictions, we believe adult tobacco consumers reduced purchases for non-tobacco discretionary items like gas, transit, and entertainment, contributing to an increase in available discretionary income. Adult tobacco consumers continue to make fewer trips to the store, but increase their tobacco expenditures by buying more packs and cans per trip. We also believe fewer social engagements allow for more tobacco usage occasions. All of these factors contributed to improved tobacco industry volume performance in the second quarter. Turning now to our non-combustible portfolio. We're excited to continue expanding our non-combustible product offerings and making progress towards our 10-year vision. We believe oral tobacco products, e-vapor, and heated tobacco present significant opportunities for adult smoker conversion to non-combustible products. Of our oral tobacco products segment is to maximize profitability over time in traditional MST through the strength of Copenhagen, and to responsibly and rapidly grow on oral nicotine pouches. The oral tobacco products segment grew adjusted OCI by 8.1% in the second quarter and 10.5% for the first half, driven by higher pricing and volume, which more than offset investments in on!
The COVID pandemic negatively impacted our second quarter results. In wine, Ste. Michelle continues to operate in a highly competitive category, driven primarily by lower on-premise and direct-to-consumer sales. Ste. Michelle has started a strategic reset to maximize profitability and improve long-term cash flows. In beer, we recorded $98 million of adjusted equity earnings in the second quarter, representing Altria's share of ABI's first quarter 2020 results and a decrease of 43.4% from last year. Turning to cannabis. In the second quarter, we recorded an adjusted loss of $17 million related to our Cronos investment, which primarily represents our share of Cronos' adjusted first quarter 2020 results. Cronos is executing its strategy of developing disruptive intellectual property and building iconic brands. We believe Cronos is making progress in executing its asset-light strategy. Recently, Cronos, in partnership with Ginkgo Bioworks, successfully produced one of their target cannabinoids using fermentation in an R&D test setting. This is an important step toward the company's goal of producing cannabinoids at large scale that can drive future cost efficiency and product consistency. Cronos remains a long-term strategic investment. We believe a legalized cannabis market in the U.S. presents a tremendous growth opportunity. We reiterate the importance of an appropriate regulatory framework and intend to work with policymakers and regulators to create a responsible U.S. cannabis market.
In light of all of this, folks, I would love to know, are you a fan of Altria Group? Do you hold this in your portfolio? I'm sure if you're watching this video, you obviously have interest, and I want to know your thoughts in that comment section below. I've literally been answering every question and every comment, as I am here to engage with you guys to my fullest extent. I love learning this stuff, and I love what this community provides. So consider subscribing for future updates on Altria Group, but stay cool, stay awesome, and I look forward to chatting to you tomorrow.